Okay, so we just review what happened on Monday, the July 20th. Now we're gonna review what happened on Tuesday, okay? So Tuesday candle will be here. This is Monday's candle. Now, this is a perfect example of me telling you how do I get my bias whenever there's no, um, I guess, continuation trades or C2 closures. We don't have no C2 closures. We had it here, C2, C3, C4. Monday did a continuation here to the downside because Friday closed below Thursday's low. When I look at Monday's candle, it's kind of like an inside candle, right? It doesn't really tell you anything. It closed here on the top, here. So it didn't really close below it. So how do I get my bias from this one? Well, I look at the midpoint. So what I do, I put the high, I put the low, and I put the midpoint. I would like price to respect the midpoint to go high or below to go low. And I look at other indices to see if they're in line with it, like ES and YM. Again, I'm gonna re-emphasize that I pay more attention to ES than YM. YM sometimes it just does its own thing. So I don't have C2 close bias, a C2 closure bias or a continuation, daily continuation bias. I'm going to be watching the midpoint, okay? So once I establish that, I go into the hourly chart. And on the hourly chart, you see that I have my daily candles here and then the hourly candles here. So then I'll go and I fast forward to 9 o'clock if it allows me to do it. Let's see here. It's 1, 2, 3, 4, 5. That's 8. That's 9. Maybe the new one. That's 9. So this is where I start, right? This is where I start. And again, I didn't have a set bias, and so I'm watching the midpoint of this day. Now, to be fully transparent, this day I took a short, and I think some of you messaged me, why did I take that short? So what I was watching is we have a 1 day fair value up here, a bearish 1 day fair value up, right? And around the same area here, I had, let's see, give me just a second. I guess I'm doing this as we go. Okay, there you go. Give me a second. This is the weekly chart. I'm gonna put this in red. I think that's red. Okay, this is the daily chart here. All right. This this line here, this line there, it's previous week midpoint. I watched that too. So the midpoint of previous week, okay? So I have a cluster of levels here. What do I have? I have a 1 day bearish for value up. In fact, let me put change color. 1 day bearish for value up here. In addition to that, I have previous week midpoint, which is this dotted line there. And in addition to that, I have a this blue line here. That's previous day high, right? That previous day high, previous week midpoint, and you have a bearish fair value up. I expected a reaction from here. Again, this is more advanced because you're sort of going against the daily candle. The daily candle is expanding pretty high. You see how when Tuesday opened, it took the previous day low, which was Monday, and um, I believe ES did it, but not YM. Yeah, you see how YM did not take the previous day low. So you have an SMT there, a bullish SMT, right? So if you do this, you're going against the daily candle and you have to sort of know what you're doing and you have to be able to take a loss without going on tilt. If you're a new trader and you don't know how to control yourself, then why take trades like this if you're gonna go on tilt after you get stopped out? But that was what I was looking for this day. I took a short this day in the 5 minute time frame. I believe I entered here at the top at 9:35 and then I took it lower. But again, this is way more advanced. I would like for you to stay, not saying that I'm the only one that could do it. You could do it as well, but with a little bit more screen time and a little bit more experience in the market. Now, that was the short explanation as to why I took this trade. I know some of you asked, so that's the reason. Now, if I wouldn't have taken that trade, this is what I would have taken. So now this is NQ. Again, we have the SMT at below, YM here. YM did not take previous day low, and ES and NQ did. Okay. So we have a bullish SMT to go up. Notice how price is consolidating like this. And you do have a C2 closure here to go high and a C2 closure here to go low. But you're above previous day midpoint. So if you're above previous day midpoint, you are bullish, right? And if you look at the daily candle is bullish. Now, I always like for price to come and sweep out the consolidation low before I try to do anything. So if I wouldn't have taken that short, this is what I would have done. You see this low here, that's the price is clearly consolidating here, right? This low needs to be taken out in order for me to go high. So what do you need to do? You need to wait for that low to be taken out. So let's wait for another candle. 10 o'clock opens. Let's see here. 10 o'clock opens and it doesn't really take the low. No, actually it did. Hold on, I don't know why it's this. Yeah, 10 o'clock opens and it takes the low, right? You see how you open, came down, swept this low here, right over here. So now he swept the consolidation low. Boom. 9 o'clock actually swept the consolidation high, right? And then 10 o'clock came, swept the consolidation low, and then he gave you a C2 closure. You see how 10 swept 9's low and swept the consolidation low as well, and then he went back up. Well, that's kind of what I like to see when that happens. Look, we have a tiny fair value gap here, a 1 hour tiny fair value gap. So he swept the consolidation low. You came into a tiny fair value gap here, and he gave you a C2 closure. Now you have a framework for price to go higher. And another thing is this. I don't really like to I don't really like to go long like below previous day low. So like for example, if the C2 closure would have happened here, but the candle 10 o'clock would have closed below previous day low, I don't like that. I want it to go above previous day high. I'm sorry, previous day high. I want the 10 o'clock candle to go above previous day high and then I can look to long. But trying to long below previous day high, like over here, you, as soon as you take previous day high, you could reverse. So I don't like that. That's why I want 10 o'clock to sweep the consolidation low, then close above previous day high, and then you can look for C3, which is 11, to potentially take you higher. I hope I made that clear. Again, I'm not editing this video, so I'm sorry if I misspoke and um, said the wrong thing, but then I corrected it. Um, so just to recap, we're above previous day midpoint. We had a consolidation here. 9 o'clock swept the consolidation high, then 10 o'clock came and swept the consolidation low, came into 1 hour for value gap, and then closed above previous day high. Now I mark point 0.5 of the 10 o'clock candle, and now I can see and go to the lower time frame to see if I can get an entry. And before I do that, I want to check ES to see how ES is behaving. So when I come here and I check ES, I also see that ES is above a previous day midpoint. So that is in line with what I want to do, right? I don't really want to see it below because then it's weak, it's not catching up. They're supposed to go along with each other, right? So once I do that, I'm okay with framing the long from here. Then I go into the 5 minute, and then I try to frame my long from here. Now, also this day, if I go to the 4 hour time frame, you'll see that in the 4 hour time frame, um, we also have a 4 hour bullish fair value gap. Look, see this bullish fair value gap here? So when we go into the 1 hour chart, you notice that when 10 o'clock came lower, it swept a consolidation low. It went into that 4 hour fair value gap, which is above midpoint, and then closed above previous day high. Now you kind of have something. When we go to the 5 minute, you clearly see that 10 o'clock came lower here, right? It opened low, went into this 4 hour fair value gap, and then it started trending higher. Again, I don't really want a long below here when previous day high is right there. I don't like that. I want it to close above. So then I wait for the 11 o'clock candle. So what do I want the 11 o'clock candle to do? I want the 11 o'clock candle to open low and then go high, right? There's a 5 minute fair value gap here. Let me place it. 11 came into this 5 minute fair value gap here, the POI. And then let's see the reaction from here. So expansion to the downside and then expansion met with expansion to the upside, that signifies a retracement. Okay. So now you could enter here, but I wouldn't do that. If you long from here, you put your stop loss here, it's about 92 handles stop loss. It's pretty high. That's pretty up there. So you'll need, in order for you to get 2R, you will need about 189 handles. Can that happen? Sure. But can you be patient and maybe wait for a retracement to get a better feel? So let's see what happens. Price starts trending up. You don't want to get in there. But now we formed a new fair value up here. You formed a 5 minute fair value up here. So now what you could do is you could wait for price to come down here, tap the fair value gap, get in since you already had a change in state of delivery here. Let me let me mark the changes to the delivery there. We have that change instead of delivery here. So you could place your buy at this fair value gap. Keep in mind, we already had the shift and change instead of delivery. So you don't really want price to come and just respect this fair value gap here. You want it to be respected because if it comes down here to this other one, then it's probably gonna take this low. And so you can enter a position there, maybe put your right below the 5 minute fair value gap, or you can even put it a little bit below this order block here, right there. I would place it below the 5 minute fair value gap. So and then you shoot for 2R, and your 2R is there. So you allow price to come down into this fair value gap first. Let me delete this 4 hour fair value gap. But you have to be patient, right? Now it tapped us in. We're in now. But if you start saying, "Oh my God, it's gonna leave me," I'm just gonna get in here on top, you're gonna get a bad feel, and it's gonna be harder for you to get your 2R from there. So this is where you have to either I'll be patient, and if it doesn't let me in, then it'll leave me. And then just knowing that you have uh, another play coming tomorrow. And so you're in here, you take a little bit of drawdown, right? But price is respecting that 5 minute fair value gap, and then you just let it play out. Let me extend this here, and then see if you get your 2R. And then you got your 2R here. So you shoot for your 2R. So now, some could argue that you could have entered here because 10 o'clock went low, then change instead of delivery here, and 9 o'clock had already swept 8. But I don't want a long below previous day low. I want a long above previous day. I'm sorry, I don't want a long below previous day high. I want a long above previous day high. But you could have done that and it would have worked. But based on my data, it doesn't really work for the most part. So then 11 o'clock came, open low, change instead of delivery, expanded very aggressively, right? Because if you would have entered here at this candle, you would have your stop loss could have been 110 handles. That's way too much. That's too much. Sometimes I have big stop losses, but this is for the most part, especially with how July has been delivering price, I wouldn't do that. So then you enter at this fair value gap here. Your stop goes below the fair value gap, and then you shoot for 2R, and that's what's exactly what happened. You got your 2R. It took a while. It was consolidating pretty nasty, but you still got it. So now, just to recap, it all stemmed, this play happened because we were above previous day midpoint, because we tapped into a 4 hour fair value gap, because we went above previous day high, because 10 o'clock swept 9 o'clock, then you potentially have 11 to go higher, 11 open low, change the state of delivery, you allow price to come back into this fair value gap, you put your stop loss below it, and then you shoot for 2R. And that is a high probability play. But again, it all started from the hourly chart, allowing price to sweep that consolidation low here into the 4 hour fair value gap, being above previous day midpoint. And ES also showing that it was above there too. think YM was below, but again, sometimes I don't really pay attention to YM that much. Um, but you also had another confluence where YM did not take previous day low, ES and NQ did. So that's a bullish S&T. So that's how I would have framed this display on Tuesday if I wouldn't have taken that short. Let me know if you have any questions.